And speaking of Tuesday, this was the first monthly expiry of the Nifty at play, where the gas was also underway, and the kind of reversal that we've seen from the day's lowest point. Just take a look at that sharp spike on the Nifty towards the end of the day. 0.5% higher is where we've shut shop, about a 180 point uptick from the day's lowest point. At one point, even we were struggling to hold on to 24,150, and 24,334 is where we've shut shop for the day. Very good recovery coming in for the Sensex too, 0.4% higher over there. Nifty Bank also saw recovery from the day's low, but managed to end absolutely flat. You've got the small cap index that ended nominally under pressure, but the Nifty mid cap was higher by about 0.5% as well. So good show coming in across the board. Now, at one part of the trading day, we had about three sectors that continued to be in the green, namely pharma as well as FMCG. But towards the day's end, you've seen a massive boost coming in across the board, because you've got Nifty Pharma as the top sectoral gainer, 0.8% higher over there, followed by PSU banks, IT, media, auto, FMCG, finance, defense. All of these indexes ended in the green, and even the three that shut in the red, energy, metal and bank, less than 0.1% cut. So absolutely flat move over there, and we've barely seen any losses in terms of the sectoral movers on the street. From the broader end of the market, while for the most part of the trading day, the advanced decline ratio was tilted towards the declines, we saw a reversal over there as well, and close to 270 stocks ended in the green, with the biggest gains coming in on some fertilizer names, and we're going to be talking much more about that in the second half as well. You've seen Fact, Paradeep Phosphates, all of them have done well, along with a surge in Vodafone, Cyient, Paytm, Angel One. However, what continued to be under pressure was Hindustan Copper on the back of its OFS being fully subscribed, 7.5% cut over there. IIFL Finance, that stock was lower by about 5% on the back of its housing finance subsidiary being served a tax notice. Balrampur Chini, Data Patterns, Reddington, Welspun Corp. Stocks that saw massive gains on Friday as well as Monday saw some profit taking, and that was the texture of the market. But while that was on the equity front, let's take a look at the FNO snapshot, and Sajid is joining us on the show with that.
For that, the Nifty ending 0.5% higher, the last 150 points spike coming in the last 45 minutes of trade for the Nifty there, and the Nifty September series, closing with an open interest of nearly 1.35 crore, which is slightly lower than what we saw in last month when we rolled over from July to August series. Finally, the open interest up nearly 33% in today's trade. The Nifty Bank again closing absolutely flat. Shorts have been seen in some of the frontline stocks like HDFC Bank and others, and Axis saw some short positions, but ICICI, SBI and PSU Banking Pack saw some long build-up in today's trade there. But look at what's happening in call and put writing. A lot of put writing came in the last 45 minutes of trade there. Especially at 24,200 at 24,300 level, and 24,200 acting as a strong support for the Nifty. Look at the distribution while the Nifty ended about 24,300 levels. You're seeing a good support coming at 24,200, and that will act as a good support going into the next series, especially tomorrow onwards. Remember, there's another expiry which is expected on Thursday for the Sensex, so there will be some volatility which is there when the Sensex expiry happens. But for now, the Nifty about 24,330 level there. Vodafone was the biggest gainer, one of the biggest gainers there, 8% up, shorts getting covered there. Paytm saw some long build up happening. Angel One saw some short covering. In the losing pack, you had stocks like Federal Bank, there's a long unwind happening. Dalmia Bharat is seeing a long unwind, and Oil India is seeing a long unwind in today's trade. Look at what's happening in the open interest gainers part. Info Edge, so a good amount of positions getting rolled over to the next series. 360 one is seeing a long build up, and Jubilant Food is seeing a long build up. On the losing pack, you had NMDC, Vodafone Idea and SAIL seeing some shorts getting covered in today's trade. So we end the August series 0.5% higher. The kind of volatility which we saw, not much in that sense. The NSE cash window, so roughly around 1,300, 1,400 crores of turnover. So mostly 350 or 400 crores of additional turnover coming in the last 15 minutes of cash. And that brought in some kind of spike, especially for some of the IT stocks, because the IT index was up 0.5% at close today. So it's mostly the IT stocks that led the spike and the jump for Nifty, for finally the Nifty closing at 24,334 levels.
Sajid, thank you so much for taking us through that. That's everything that's transpired on the FNO front. Just to bring you up to speed with everything to expect for Wednesday's trading day, while not much happening back home, globally later in the day, post our market, we are going to be getting numbers on the consumer income front from the US along with the PCE price index, which remember it's the Fed's preferred gauge of inflation along with GDP. From the US, Nvidia is going to be reporting its earnings and that could have a trickle-down impact on IT day after tomorrow back home. So watch out for that. In terms of corporate action, Keystone Realtors, otherwise known as Rustomjee, is going to be mulling a fundraise. Time Technoplast is going to be reviewing their merger as well. And there is a stock split for Waterways Leisure Tourism. And record date for the 7:40 rights issue for Ratnavir Precision with one listing on the IPO front, Jana Alternative Asset Management. That's everything that we are going to be watching out for. But in terms of the technical setup and the levels to watch out for, let's welcome on board Mr. Kunal Parar, the Vice President of Technical Research and Algo at Choice Equity. Kunal, hi, good to be speaking with you. Quickly give us your sense on the way the market has closed on Tuesday, the sharp spike that most of us did not see coming in the first half, and how sustainable is this for the rest of the week?
Well, first of all, good afternoon. And yeah, it was a very joyous expiry, and we didn't expect this. Uh, actually, good spurt was there during the dying hours, and finally Nifty settled at 24,334 at about 24,300 level. And since last many days, Nifty has been sitting between the range of 24,000 to 24,000. 400 to 24,600, and if you talk about upper side, then 24,400 would be there. And if we break this level, and then yes, 24,600, even we can see this level. But the way Nifty has been trading between the range, I think we can't expect any further spurt beyond the 24,600 level. And if one has to see this movement, and every large cap has to perform very well. So at this level, Nifty maybe plays game between the range of 24,000 to 24,600 range only. And yes, today was the monthly expiry, so we were expecting some kind of volatility, but this kind of volatility we didn't expect. But yeah, it's there, and it's good that Nifty finally gave its monthly closing about 24,300.
Okay, your picks, Kunal?
Well, two stocks are there which looks very attractive in terms of rollover and in terms of technical. First stock is Zydus Lab, right now trading at 1123. Downside strong support comes at 1090, and if you talk about upside momentum, then first target comes at 1150, 1150. And if stock break this level, then further March will be toward an outward direction up to the level of 1190. And second pick is from FMCG. It's VBL, Varun Beverages Limited, right now trading at 435. Technical structure looks very convincing, and it gives also confidence to get into the stock at present level with the strict stop loss of 428. If we talk about target wise, first target comes at 441, and if stock break this level, then 450 would be there.
On that note, we'll let you go. Thank you so much for your time. So Zydus Life as well as Varun Beverage is looking good to Kunal on the charts. On that note, time to slip into a very short break. On the other side of the break, we're going to be decoding the theme of the day, and that no doubt has to be a sector that has done really well in trade on Tuesday, and that's fertilizers. The kind of move we've seen, we're going to try and decode that with Mr. Prashant Bhayani of Elara Securities, try and understand this offer that's come in from Russia amid the geopolitical uncertainty that's only heightening between the US and Iran. What happens to India's supply? The India urea buying that we've seen of late, how does that translate into company performance? And this lack of monsoon, the El Nino here, how does that pan out for Q2 earnings? This and lot more in conversation on the other side of this very short break. Stay tuned.
Welcome back, and you've got some cohort of stocks which were buzzing, and among those were some of the fertilizer names, and they were in focus after Russian President Vladimir Putin offered to increase fertilizer supplies to India. Merrill joins in to explain what this means from an industry standpoint.
That's right. So fertilizer stocks are seen in focus today after a fresh geopolitical development on that front. Russian President Vladimir Putin has assured India of uninterrupted fertilizer supplies, and has also said that Russia is now working to increase shipments to meet the requirements of Indian farmers over here. Russia is already India's largest fertilizer supplier, and this is particularly for urea, which faced severe shortages, and with imports from Russia rising nearly 40% in 2025. Now, this development is particularly important after the recent West Asia crisis and the supply disruption, as well as the higher freight costs that we are seeing for transports and shipping coming from that region. This had previously raised concerns around fertilizer availability, and the Indian government had also been diversifying sourcing and maintaining adequate stocks for fertilizer use leading up to the Rabi season as well. For the markets, the key beneficiaries of this are FACT, RCF, Paradeep Phosphates and National Fertilizers, all of which we have seen buzzing strongly in trade today. So now the market will therefore be watching out for any long-term supply agreements, potential joint ventures, and also any actual ramp up in Russian shipments on ground as well.
Meryl, thanks for taking us through that. And on the back of this positive development, at least for the fertilizer companies back home, you've seen a very sharp spike in FACT, in RCF, Paradeep Phosphates. These are just some fertilizer names that have done well. Let's try and understand what lies ahead for this sector, because other than geopolitical cues, you also have the weather and the El Nino situation that's at play. So we'll see how each factor balances the other out and how Q2 earnings could shape up to be. Let's try and decode all of this with Mr. Prashant Bhayani, VP of Institutional Equity Research at Elara Securities, joining us on the show. Prashant, hi, good to be speaking with you. First up, give us a sense of how you are reading into this development in terms of Russia's offer for more fertilizer shipments to India. We've seen the street react extremely positively to this offer. How are you looking at it?
So, at a country level, this gives us leverage in terms of, it opens one more option with which we can diversify our fertilizer purchase. Russia was already a market for us. Now, with that market opening up further, I think the urea availability will increase further, and it can bring in fertilizers can be brought in India at more competitive price. So that way, I think it will be beneficial for government because it will help them to reduce subsidy, as well as for NPK imports. I think it is profitable for the domestic fertilizer companies who import from Russia.
What's playing out currently, Piyush? If you can give us that perspective first off. What's played out in Q1 and how bad could Q2 be if this were not to happen, and how much of a positive the fact that this is happening?
So it does not make or break a situation or the current situation. We have already diversified our sourcing, and we buy things from Russia also, more so NPK and potash, less of DAP and urea. It does not make or break scenarios, but yes, Q1 I think volume were good because of pre-buying as well as demand because of augment of Kharif season, and companies also benefited from low cost prices of raw materials and higher subsidy as well. Now going into Q2, I think companies have started to feel the pinch of higher raw material prices, and the government has not increased the subsidy further to the extent to which the inflation has been there in RM. So I think at least on the profitability front, there can be some pressure. On the fertilizer sale, I think depending on in which part of India we have seen normal rainfall and below normal rainfall, I think volumes will be impacted. Certainly in some part of south we have seen deficit rains, their volumes will be lower. So Q2 is likely to be lower, poorer than Q1, if I can put it that way.
The outlook for Q2 for some of these fertilizer company earnings is not looking as bright as Q1. Prashant, I was just reading yesterday that the Indian government has bought a lot of urea off late, and in fact more than that is required. Do you believe that this is panic buying in light of everything that's happening geopolitically, or do you believe that this is the need of the hour and that could take some pressure off the fertilizer makers?
Actually, it's quite a good step rather, because urea prices have fallen. And if we have bought it right now, then we are building up inventory at competitive prices, which does not always happen. So that way, I'll take it as a positive thing. At country level, we should certainly have some adequate number of stocks because we are a net importer of fertilizer. So it's a step in the right direction, and I won't allude it to pre-buying. We are just being opportunistic in this scenario.
How are you looking at risk reward in the sector at this point in time, and what's the best way to play it, Prashant?
See, the kind of increase in raw material prices that we have seen, I think the dependency of the industry on Government of India uh, for higher subsidy has increased tremendously. Uh, which way the stocks will move is either in the hands of uh, when the Iran US war stops, or when the government increases the fertilizer subsidy. So I think the answer lies somewhere between the two. Whatever developments we see from on these two fronts will dictate the near-term movement of fertilizer prices. The best way to play the fertilizer demand growth in India, I would be complex fertilizer manufacturers like Coromandel and Paradeep Phosphates, because they not only give you opportunity to play the fertilizer demand scenario, but they are also backward integrated manufacturers. So some bit of value addition is also captured by both the companies. So those two would be the preferred picks. Having said that, the decline in Chambal stock price has also been significant. There is little to lose from here, except some of the regulatory developments which all are awaiting. So Chambal is a value stock. It may not offer immense upside from here, but it is also in a value zone.
Okay, thanks for sharing your top picks with us. Prashant, also I want to ask you, you did say that quarter two could be slightly under pressure and not as good as quarter one. But a few days ago, we were interacting with SkyMet and they said that this is going to be the year where we see one of the lowest rainfalls in the history of the rainfall that we've received ever since we've been recording it. And there is a 70% chance of a drought, and that could also affect Rabi sowing. What I'm trying to understand is, do you believe that this pressure on fertilizer earnings could last well beyond quarter two into quarter three, and maybe to some extent quarter four as well?
See, more than the developments on rainfall, monsoon, or sowing, the near-term profitability trajectory will depend on the raw material prices as well as what the government does in response to that. Fertilizer demand is relatively insulated from weather vagaries, not fully, but relatively. But I think the major decision makers right now would be one, international raw material prices and how they move on from here, and second would be how the government reacts to that in the form of higher subsidy or lower subsidy.
Prashant, while I have you, also curious to know how you're looking at Q1 earnings, and any concerns per se from the earnings print that has come our way, and anything that really stood out for you, if you can give us your take, your perspective.
I think all the listed companies stood out in terms of both volume growth as well as EBITDA per ton growth. There was little to complain about, whether it is phosphatic fertilizer manufacturers or even urea suppliers. Everyone reported decent volume as well as very good profitability growth. So nothing to complain from Q1, and that is why I think the benefit of higher volume growth and higher profitability driven by competitive RM prices. All of this peaked in Q1, and Q2 onwards there may be some pinch because of higher raw material prices. That is why I think Q2 may be relatively softer than Q1.
Point taken, Prashant. On that note, thank you so much for your time, and thanks so much for breaking down the sectoral outlook for us. Good to be speaking with you today.
Thank you.
On that note, viewers, I'm afraid we're completely timed out on this edition of Market Edge. From Harsh, me, and the team that put this show together, thank you so much for tuning in. Keep watching ET Now for more news and updates.